Welcome to my new channel about an alternative way to invest in gold by buying pre-1933 U.S. gold coins. Ever since gold passed $2,000 an ounce a few months ago, there has been increased interest in gold investing. Add to that inflation concerns, bank failures, an uncertain stock market, the war in Ukraine, an uncertain economy, and more. The problem is that most people have never invested in gold and are unsure where to begin. In future videos, I will talk about what to buy, what not to buy, how to value, and more. This approach is not a get-rich-quick scheme. You should be a long-term investor with a time horizon of 5, 10, 15 years or longer. These videos are not investment advice, but rather educational in nature. I bought my first gold coin back in the 60s, and along the way I've learned a lot, which I will be sharing with you. The fact is, only a small percentage of Americans invest in gold. This has its roots back in 1933. In 1932, at the depth of the Great Depression, FDR was elected president. One of his very first acts was to sign Executive Order 6102 on April 5, 1933, banning the ownership of gold by Americans and requiring citizens to turn in their gold by May 1st of that year. Now, there were some exceptions. Anyone could keep $100 worth of gold. Coins with collector value were excluded. This would be an example. This was from 1838. So in 1933, it was 95 years old and had some collector value at that point, so you could keep a coin like this. Also, jewelers could still deal in gold, dentists could still use gold, but that was about it. Otherwise, people were subject to a $10,000 fine, equivalent to several $100,000 today, and up to 10 years in prison. Many people did comply, though a lot of wealthier people shipped their gold to Europe. And after that, gold was no longer used for money. This 1932 $10 gold piece could have been in somebody's pocket that year, and this was money. This was what people spent. But not after 1933. Soon after the gold recall, the government revalued gold from $20.67 an ounce to $35 an ounce. Unlike today, where the government can just print more money, that wasn't the case in 1933. But by calling in all the gold and then increasing the value by almost 75% from $20.67 to $35 an ounce, the government now had a lot more gold value to use to increase the money supply, which FDR needed to increase gold spending and government spending to fund his Great Society programs and try and spend our way out of the Great Depression. One of the results of this was that Americans no longer invested in gold. In 1971, President Nixon officially removed the gold backing of the dollar, and in 1974, President Ford lifted the ban on gold ownership, but the damage had been done. After 41 years, almost 2 generations of not allowing gold ownership, most Americans no longer considered gold as an investment alternative. Like other countries of the world, investing in gold was just not a part of our culture. Even though the ban was lifted nearly 50 years ago, only a small percentage of Americans invest in gold today. Now, there are a number of ways to invest in gold. You can buy gold bullion coins directly from the U.S. Mint, called the U.S. Gold Eagles. There are a number of countries also making bullion gold coins. The South African Krugerrand and the Canadian Maple Leaf are two popular alternatives. You can buy a gold exchange traded fund, or ETF, which is essentially paper gold, but I believe classic U.S. pre-1933 gold coins offer the unique advantage of offering both the gold value plus a collector or numismatic premium above the bullion value. And by watching these videos, you will learn how to buy these collector gold coins. If you would like to be a part of this, I encourage you to share, like, comment, and subscribe. and become a part of the gold investment community. Thank you for watching and welcome aboard.